Hey, good morning, guys. Welcome to Market Mondays. Hopefully, you guys had a great week. It is officially summer here in Washington. It's getting pretty hot up here. So, luckily, I'm working on getting an AC unit into my place. So, super excited about that. So, today we're going to be going into what the Fed week essentially. So, there's a big announcement from the Fed. So, you guys are going to hear it Wednesday afternoon about probably a hike rate again on the Fed funds rate. So, we'll talk a little bit more about that and just showing you guys a few quick numbers of what's going with mortgage rates all across the nation on an average, basically on an average. Before we get started, getting right into our dad joke for the day. So a group of butts are walking into are walking. A group of butts are walking. The smallest struggles to keep up. Then he says, "Sorry, I'm a little behind. I'm a little behind." Anyway, so this starting tomorrow, there's going to be what's called a 2-day Fed meeting. So they spend about 2 days, once a month, every 3 weeks, really, to just talk about what they're going to do with the economy. Every time they do this, usually in the last since the start of the year, that's where we start hearing about what the Fed will do with the Fed funds rate. So every time there's a Fed funds rate raise, it's usually right after this meeting. They announce it right after this meeting, anyway. So there was talk of it at the end of probably mostly last week, or actually the week before, where they were going to talk about 100 basis point hike or 1%, 1% hike in the Fed funds rate. I think now the whisper is at 75 basis points, which is 0.75 on the percent hike. So it was probably going to go to 1.5 to 2.25 on the Fed hikes. So that's expected to happen. We had already talked about this every single time over the next couple of months. They're going to raise this 6 to 7 times throughout the entire year, on a total of throughout the year. So this is probably the fourth one they've done. They'll probably got 3 more hikes that they intend doing. They're actually talking about potentially ending at 3.5% on the Fed funds rate, in regards by the end of the year. Now, we already seen the impacts of this Fed funds rate rising. So with inflation slowly to curve, we started seeing mortgage rates curve a little bit too. So I've been telling everyone, be prepared for the rates coming down starting at the near the end of the year into 2023. Also, with that, usually a recession follows because of what the Fed is doing. So something to be prepared for, something to prepare your clients for. I've been telling all my clients, like, hey, rates suck right now. That's just the way it is. Blame the Fed. However, it's not going to be permanent throughout even in the next 12 months. So wait 12 months, refinance, we're good to go. There's been a lot of indications of all the recession indicators that we've normally see when a recession is coming. So we've already seen 2 negative quarters of GDP. We need one more indication. It's really just an announcement of it's called the National Board of Economic Advisors, something like that. It's something close to that. They're the one that officially announced that we're in a recession. So once they make that announcement, then that's where it goes. All right, so getting right into the charts, we're going to add this to the screen. So if you guys don't know how to look at rates on a daily basis, and this is not information that's paid for by advertising by these companies like NerdWallet, Mint, things like that, where they're getting paid to advertise these companies. This is just true information of where the average mortgage rate is based on information provided by Google. Okay. And none of this information, all this information just compiles all the data across all mortgage companies and based on where they're at. So a lot of people are saying, 4.875, 5%. Again, those are advertised dollars. This so much is not. So to give you guys, so in order to keep an eye on it, if you go into the Google search bar, type in today's current mortgage rate or today's average mortgage rate. And you'll be able to see this chart. Make sure you filter it out for the right loan programs. So for me, I specifically just look at all the 30-year fixed loans, and you can kind of go down the list and see like 30 years at 6.5, FHA is at 6.6, VA is at 6.3, USDA is at 6.7, and you can kind of see the trend over the last basically since April in regards to what rates have been doing, and you can kind of see how volatile things are. A lot of people think rates are pretty like stable and pretty flatline. They are not. They change every day and multiple times a day. So these are, of course, mortgage rates. We saw a big bump in June 13th. We saw a nice drop in the beginning of July. So then we started seeing rise. So for the most part, it hasn't. The good thing to know is that this 7% is a nice, good ceiling to note. And hopefully we don't break through that ceiling at that 7% marker. Of course, that's just 30-year fixed conventional. If you look at the red line, that's VA. You can kind of see VA, it kind of, it's not always consistent with conventional loans, but for the most part, they all tracked very, very similarly. So not on a day-to-day basis, but for the most part, this is a pretty good accurate representation of where rates are at as of today and into the next day. So this is a great tool, and if you guys need a longer span of things, I'm more than happy to supply that. So if you guys just shoot me a message, and I can totally post that if you guys like. So hopefully this gives you a perspective of where rates are at. We are seeing this nice ceiling of 7. 6.5 seems to be the main ceiling, but the high ceiling is at 7. So good to know when it comes to what to look at for rates. Otherwise, that's all I got for you guys. Hopefully you guys have a great week, and I'll talk to you guys soon.